Hey friends, in this video, I'll be sharing with you how to sell cash-covered put options on Interactive Brokers. By the end of this video, you can follow me step by step as I sell a cash-covered put option on Alibaba on Interactive Brokers. So let's say I decide to sell a cash-secured put option at $78 for the next 30 days. This simply means that I promise to buy 100 Alibaba shares in the next 30 days at $78. The most important thing about cash secured put options is that you must have the money ready to buy 100 of a particular stock. So since one stock of Alibaba costs $78, 100 Alibaba stocks cost 7,800 USD. Before you sell a cash secured put option, you must have 7,800 USD. Why do people sell cash secured put options? There's this method of investing called the dollar cost averaging principle. It simply means that every month or every fixed period of time, you decide to buy into a particular share no matter the price. Long-term wise, you should be profitable if you're owning good companies or indexes. Before selling any cash secured put options, I would recommend you to do some very simple technical analysis in terms of support and resistance. If you're not sure, here's a quick crash course. It simply means the levels at which the stock price tends to congregate at. In this example, I've drawn many support and resistance lines. The yellow line here represents the support on the monthly basis. The blue line simply means support and resistance at a weekly layer. The green line simply means support and resistance on a daily level. Given that $78 is a very strong resistance line for Alibaba, I don't mind selling a cash secured put for Alibaba at $78. Let's go on to Interactive Brokers. I'll be using the paper account for demonstration for now. So log in. If I can give you a tip, make sure you always use paper money when it comes to learning about new principles and new ways to trade, because you need to theoretically understand what you're doing before you use your real money. Okay, first things first, you can type BABA or the particular stock that you have chosen. After doing this, click on Options Chain. After seeing Options Chain, you can choose a date to expiration. This simply means the duration in which your promise is valid for. Usually for beginners, I'll choose a time duration of 26 to 30 days. I see 33 days, I'll be willing to sell it at that price. In this option chain table, there are calls and puts. We are selling cash secured puts. I'll go down to $78 here. Ensure that you're clicking on sell puts instead of buying puts. Selling puts and buying puts are entirely different things. Make sure you're clicking on sell when you are doing a cash secured put. This table on the right hand here will then pop up. Over here you can see the ask, bid and mid price. Think of it as a fish market and there are people haggling with each other. Imagine a person only wanting to buy a fish at $1.44 and the store seller is only willing to sell his or her fish at $1.66. There will be a negotiation process and this is all done digitally on the options chain. For beginners, I'll just recommend you to choose the midpoint because I think that's the easiest for most people. Looking at the performance profile, the max return you can get is about $145. That means you'll collect $145. And the max loss you can see here is $7,655. How can we get $7,655? If you buy 100 Alibaba shares at $78 each, that would cost you a total of 7,800 USD. But the reason why the max loss is 7,655 is that you must take 7,800 minus the money that you collected from selling the cash secured put option, which is $145. So 7,800 minus $145 equals to about $7,655. The reason why they say the max loss is at $7,655 is because in the case where something happens in the world and the stock value of Alibaba falls to zero, that means you completely lose all your money. So there's always an inherent risk that you'll lose all your money when you're selling put options. But of course, with risk come reward. Something big must really happen for Alibaba to fall from its current stock price at $84 to $0. I would dare say 99% of the time, usually these kind of things don't happen for big companies. The chances of them going to zero, it's extremely low. If you're trading with penny stocks or low price stocks, then that's another issue because the chances of them falling to zero is very high as well. So these are the considerations that you need to think of before you sell cash secured put options. In this table, they'll also show you the probability of profit, which is 79%. And when you're selling put options, usually the percentage of winning is much higher compared to buying options in this case. Let's proceed to click order. This window would then pop up. Make sure you click sell order. If you select one, that means you're promising to buy 100 stocks within a certain time duration. If you select 5, it means that you're promising to buy 500 of the particular stock in a certain time duration. In the case, if you sell 5 contracts of this put option, that means you need to get ready 5 times 100 times $78. You need to prepare 39,000 USD. That's the most important thing about selling cash secured put options, is that you must have the money. Technically, you can sell put options without having the money. That's called a naked put option. That's something beginners should never ever try try. Never sell a naked put option if you don't have the money, because you need to make sure you know what you're getting into, because if you don't know what you're doing, you can potentially lose a lot of money. And that's the last thing I want for anyone who is getting themselves into options trading, because it is a very risky thing. You must know what you're doing before you trade naked put options. Well, let's go back to the example. I'll just click quantity of 1. Order type for beginners, I really feel market is fine. Click on preview. Once you click preview, you will be able to see the amount of money that you collect. In this case, you're selling 1 contract of a put option on Alibaba and you'll collect 157 US dollars. If you were to go ahead to click this button, you'll then collect 157 USD, and that's cold hard cash in your broker account. Whatever you want to do with that cold hard cash is up to you, but within the next 33 days, you must be prepared to buy 100 Alibaba shares at $78. So right now, there can only be 2 things that happen once you sell a cash secured put option. Scenario 1, if the stock price of Alibaba is above $78 in the next 33 days, you don't actually have to spend your $7,800 to buy 100 stocks of Alibaba. Because if, let's say, the price of Alibaba in 33 days time would be at $102, no one in the right mind in the market would want to sell you their Alibaba shares to you at $78 when they can sell the actual price of Alibaba at $102 in the market. And if that happens, you get to keep this $157 in your bank account and do whatever you want with it. So that's a $157 in profit for you to keep. Scenario 2, the stock price of Alibaba goes below $78. Let's say it goes to this straight line here at $70. This is where it becomes a little tricky. When the stock price of Alibaba falls below $78 in the next 33 days, you must buy 100 Alibaba shares at $78 and you must spend 7,800 USD to buy 100 Alibaba stocks. The bad thing about it is that you immediately lose money. The reason why I say this in quotation marks is that if you believe the stock price of Alibaba will go beyond $78 in the next 1 year or 2 years, you don't mind owning it at a cheaper price. Let's say the actual price of Alibaba drops to $70 in the next 33 days. You just spent $7,800 to buy 100 Alibaba stocks. After you buy it, you own 100 Alibaba shares. Unfortunately, at exactly 33 days later, let's assume that the price of Alibaba is at $70 each. 100 Alibaba stocks at $70 each would cost a total of $7,000. So in this case, you have lost about $800 because you bought 100 Alibaba stocks at $7,800. The 100 stocks now is worth only at $7,000. So you would have lost $800. So why do we sell cash secured put options? I use it in line with my long-term portfolio strategy. So let's say for stocks like Apple. Apple is a company I inherently believe will be thriving in the next 5 to 7 to 10 years because I sincerely believe that Apple is a great company with great products. The price of Apple right now is at $180. And it's actually at all-time highs. If I were to say to you, would you mind buying Apple shares at $175 if you know that over the next 5 to 7 years or 10 years, you have the conviction that Apple will actually shoot up all the way to maybe 500 USD per stock? And that's the whole reason why you buy cash secured put options. You might temporarily lose money in the short term because the price of Apple does fluctuate time to time, but in the long run, you know that the price of the stock will always increase, and that's what you want in terms of your long-term portfolio investment strategy. So that's mainly how I use cash secured puts to buy stocks at a cheaper price and yet earn money at the same time. Now let's go to ChatGPT to tell us what are the dangers of selling cash secured put options. One of them is stock price decline. When you sell a cash secured put options, you're obligated to buy the underlying stock at the strike price if it falls below that level by the option's expiration. If the stock price declines significantly, you may end up purchasing the stock at a higher price than its current market value, leading to potential losses. If you sold a cash secured put at $78 and it falls to $70, you would have lost about $800. Second one, limited profit potential. As a seller of put options, your potential profit is limited to the premium you receive when selling the put option. If the stock price remains above the strike price until expiration, the option will expire worthless and you get to keep the premium. In this example, it means that if the stock price of Alibaba is at $102, it means you get to keep $157 for yourself. However, the potential profit is limited compared to buying the stock outright, which allows for unlimited upside potential. This simply means buying Alibaba and holding it for the long term. Assignment risk. TLDR of this, it simply means that you need to spend 7,800 USD to buy 100 Alibaba stocks, and 7,800 USD is actually quite a lot of money, and most people might not have that cash amount ready at hand to buy 100 Alibaba stocks. Opportunity cost. Because you're setting aside 7,800 USD to prepare to buy 100 Alibaba stocks, you need to make sure that money is ready. And everything in life is an opportunity cost. That 7,800 USD, you could have used it to buy Bitcoin, meme coins, or whatever things, buying property or whatever. Margin requirements. Depending on your brokerage and the specific options, selling cash secured put options may require setting aside collateral, usually in the form of cash or other securities as margin requirement. A simple way to describe this is you need to make sure that you have 7,800 USD ready in your brokerage account. There's one last thing I would like to share about cash secured put options. We will avoid letting the option expire worthless. 20 days later, let's assume the price of Alibaba hits $100 and the put option that I sold is now worth $50. I collected $157. 20 days later, the put option is worth only $50. So I spent $50 to buy back the put option I sold, and $157 minus $50 will be a net profit of $107. 99% of the time, if you don't want to spend that 7,800 USD to buy 100 Alibaba shares but yet still make money, this is one way options traders will go around selling cash secured put options without actually having the intention to buy them. Most options traders would close it at 50% profit or 70% profit. What do I mean by 50% or 70% profit? If I have a 50% profit target, if this same put option that I sold at $157 is now half of that, so half of $157 is $78. So let's say the put option I sold at $157 is now worth only $78.50. At a 50% profit target, I'll then spend $78.50 to buy back the put option I sold and keep the remaining $78.50. In my experience, this is how most options traders trade cash secured puts without the intention to actually spend a huge sum of money of $7,800 to buy 100 Alibaba stocks, while yet still earning money, if that makes sense. Let me know if there are any questions you have in the comment section below, and I'll reply to them as soon as I can, and I'll see you in the next one.